China's economy grew by 5.3% for the first half of this year, but if you read Reuters, you'd be thinking it is slowing. Retail sales grew by 5%, but apparently, also according to Reuters, Chinese consumers are tightening their belts. So what's the real picture? This week, the figures from the first half of this year were released and China's economy beat expectations. GDP grew by 5.3%, foreign trade in goods increased by 2.7%, hitting a record high, while exports soared by over 7%. So why is Reuters telling you black is white? Why has China not suffered after the US launched a second trade war? What's behind this impressive growth picture? Welcome to this special edition of The Point, an opinion show coming to you live from Beijing with me, Liu Xin. On today's show from Beijing, I'm joined by Professor Qinhua, Vice Dean at the National Academy of Development and Strategy of Renmin University of China. From Rome, Italy, early in the morning, Cardillo, Chairman of the Italy-China Business Development Forum. And from Brisbane, Australia, Professor Warwick Powell, Adjunct Professor at Queensland University of Technology. The warmest welcome to all of you. First of all, there have been a lot of numbers, but I have highlighted three and I want to share them with you. Of course, the first one being China's GDP growth, 5.3% for the first half of this year, definitely beating expectations and the target set by China of 5% for the whole year. Of course, we're only at the first half of the year, but 5.3%, that's not bad at all, and this is half a percentage higher than the Q1 growth of last year. Then the second number is 7.2. That is the growth of China's overall exports in goods, 7.2, despite all the difficulties, uncertainties in the international trading environment. And finally, this number, 190 countries and regions around the world. Well, basically, there are only about just over 200 countries and regions around the world. So that says that China's trade with almost every economy in this world has been growing for the first half of this year. Literally, its export grew with everybody except more or less the United States alone. So I want to go to my guests. Professor Xu, your comment on the three numbers, or any other number that jumped out for you?
It's very beautiful data to me, and I'm not surprised. I still remember last time we discussed on this program that we talk about the economic growth. We have lots of potentials. So the strong performance, I think, were driven by several factors. Firstly, just as you note that our domestic demand has been the primary engine of the growth, with domestic final consumption expenditure alone accounting for 52%. So policies such as equipment upgrades and the trade-in of old consumer goods generated 1.1 trillion yuan in sales and roughly 175 million consumer subsidies. For me, I also changed my washing machine, so it's a good opportunity. So very different for lots of Western observers. So we are winning. We are winning the economic development. So of course,
okay,
there are three.
yeah, okay. We get back to you later for more details. But you used two words, beautiful, and we're winning. That sounds familiar from the dictionary of someone in the White House, in a house that's very white. Anyway, why not? We can use this word too. We are winning in the first half of this year in terms of China's economy. Mr. Cardillo, what are the key words you can use to describe the numbers you have read about China's economic performance?
This is extremely interesting, resilience, but then also strategy. I mean, if we look the way, you mentioned, almost the increase of trade with basically the entire world, but then we see also a stronger connection with Asian countries, and the European Union is also in the picture. So this is, in terms of what we call geoeconomics, telling us a lot about the way the international supply chain is changing. and the way also consumers are directing their interest and the quality also goods or Chinese goods being shipped around the world. And this is definitely a jump in the quality. We often talked about, switching from quantity to quality, and this is exactly what is happening because Chinese export is growing in high-tech products, which are extremely impactful on many sectors, from sustainability, green fields, and innovation. So this is a different positioning of the country, which I find it extremely interesting and will have a lasting impact. And this is what the Reuters article is not seeing, how, the long impact of those
Yeah.
numbers.
Well, long impact or a huge impact is your description, Mr. Cardillo, to the numbers we are seeing. Well, you mentioned the Reuters article. Let me bring up the Reuters article because it is just so glaring that we cannot ignore it. Warwick, before I go to you, let me update the viewers on exactly which Reuters article we're talking about. It basically came out of the press conference yesterday about China's first half-year numbers. And actually, the Reuters correspondent in Beijing was at the press conference hearing the same numbers as we are hearing. And yet, the final story came out like this. The headline reads, China's economy slows as consumer tightens belts, U.S. tariff risks mount. And then here's the summary. It says China's Q2 GDP grows 5.2% versus Q1's 5.4%, above the 5.1% forecast. June data show weaker retail sales, stronger factory output. Mind you, here it says June data. Consumers, businesses face uncertainty amid U.S. tariff risks. Property downturn persists despite government support, and blah, blah, blah. It goes on. Mr. Warwick, how do you look at this report and the summary of it?
Well, it speaks to a tremendously active imagination on the part of the agency, and in fact, it's reaching Gordon Chang levels of detachment from reality. Chang has been predicting China's collapse for well over 2 decades now, and has recently updated his forecast for collapse to take place sometime around 2035. So I don't think anybody serious is going to put any store on what that particular report has delivered. It's patently nonsensical and runs counter to the evidence. The reality is that we have seen an economy characterized by, I would use 3 words. One is resilience, one is adaptive capacity, and the other one is determination. And we see this in all key domains. Retail growth, of course, is growing. I mean, to talk about retail growth slowing down when it's grown by 5%, I mean, I don't know what planet some of these people are on sometimes, Lucian, but
Mars.
It grew by 5%. Well, they might be on Mars. They might have taken an early Elon Musk trip to Mars and are now seeing a different world from what everyone else sees.
I mean, okay, not going into the details, but how can China achieving 5.3% growth for the first half of the year be interpreted as China's economy slows? In whatever sense, however, agile you are psychologically, can you come up with such a headline, Warwick? Can you comprehend it?
Look, it's just a vivid imagination at the end of the day. There has been persistent attempts over the course of the last probably at least 10 years to run down the Chinese economy. And we see a cycle of make-believe tropes which get regurgitated progressively month on month on month on month. And as each month's data comes out, which disproves last month's particular trope, then a new trope gets dusted off. So sometimes it's slowing retail consumption, sometimes it's a collapse in profitability, sometimes it's deflation, sometimes it's the property cycle, sometimes it's the credit credit impulse. Sometimes it's some figure on trade, whether it's
Yeah.
imports or exports. But whatever it is, the underlying attempt here is to portray the Chinese economy as if it's on the verge of crisis and collapse.
Yeah. Mr. Xu, well, that seems to be, the impression I'm getting. Professor Xu, how do you look at what factors do you sense are driven the journalists or the editors in their, capitals looking at this from thousands of miles away to come up with such a headline? Because clearly this is not accurate. And even in their own summary, they say China's Q2 GDP growth 5.2% versus Q1's 5.4%, above the 5.1%. So China's economy is not slowing, it's beating expectations.
I think it's the very traditional, typical, the Western description of Chinese things, not only an economy, but also lots of other things. So I think maybe in comparison, some of the countries, they are somehow jealous of China, a very fast development in their original thinking that under the United States tariffs, China's economy will be in the quick track of failure, but we don't. Second, I do invite those people to have a very good field study in China, look into China's different sections of the economy. For example, the trade, the industry, and also manufacturing, and also and the traveling, and she or he might be feeling that what the real China is. So I think, I don't think people will believe it.
I agree with you totally. I agree with you. Unfortunately, this journalist is based in Beijing. There's no way that he doesn't see, right? The tourists, the hustle and bustle.
Based in Beijing, maybe can write the different words of what they have been thinking.
And he's contradicting himself. He's contradicting himself because in the headline it says China's economy slows, but in the summary, China's economy beat expectations, is above the forecast.
So this reminded me that next time I need to accept the invitation of those newspapers interview.
For an interview, so that you can talk to them directly.
Before I always refused, so now later I will do it. Yeah.
Good. I'm happy that you'll be considering. Mr. Cardillo, what is your impression listening to all of that? You have been listening very attentively. What is the impression of Italian businesses, for instance, or your observation? I mean observation, I don't mean intention. The observation of Italian businesses or yourself observing, since you are chairing the Italy-China Business Development Forum, is what you're observing more in line with what the true numbers are telling, or in line with what these reports are writing about?
No, definitely I'm more in line with the numbers being published yesterday, and 2 days ago, and it's what I see. It's like definitely from some Westerners' point of view, what is happening with the trade war and tariffs and those sanctions is reshaping global order, and definitely it's many things that are happening came unpredicted, not because and honest observers couldn't find out, simply because they are all like victims of a kind of wishful thinking or whatever, like trying to put expectation, or kind of like trying to look some results for some domestic policies that definitely are not producing those results. And if we look at the tariffs, those literally changed the supply chain and trades, but did not stop it. From my perspective, the Italy-China Business Development Forum, I see a strong interest from Italian companies, but also European companies, to keep doing trade with China, to keep innovating with China, then the Chinese government recent measures on stabilizing foreign investments in China, the 2020 plan, is also being very reassuring about the quality and the support for foreign investments. And then also the service industry is more and more open to foreign investors. So from this perspective, I see that the Chinese market is an important market for Italian companies, that Europe also is an interesting destination for Chinese investments. It's interesting that,
Actually, yeah, sorry for interrupting. Actually, trade between China and EU went up for the
yeah,
first half of this year. The United States is the only dark spot, I'm sorry, but trade between China and other developed countries, with the European Union, with Japan, with the Republic of Korea, have all gone up. So the EU and their companies and their general consumers, they should pay attention to this trend, Mr. Cardillo, isn't it? I mean, instead of following the narrative of China, having abuses and this and that, or China is a rival, is a challenge, blah blah. I'm sorry,
yeah.
I shouldn't use this blah blah word too often.
But it's if we look at the European strategic outlook on China, like the three words used is that China is a partner, a rival, and a strategic competitor. But what does this mean? It means that policymakers should be more deep in the drafting of their policies to see really how to define how to find out where we should be like competitors and where we should be strategic partners. But the thing is that from my perspective, there is always possibility to find partnership in every sector. It's just a way about drafting and drafting the policy and keeping the dialogue on. And this is what I'm looking for the 24th, when the European delegation will be visiting China. I just want to remind everybody that today is the 50th anniversary of diplomatic relations between China and the European Union, and this is an important meeting because it's coming at a place where Europe is dealing with the tariffs from the United States, and she's reconsidering the trade balances, and China is an important actor.
China is part of the solution, please. Professor Warwick, let me go to you. As I said, despite the bright picture, trade between China and the United States did drop to a very significant extent. Overall, the value dropped by 9.3%. U.S. exports to China dropped by 7.7%. Its imports from China dropped by 10% for the first half of this year. Your comments on the development, despite all the growth everywhere else?
Well, it goes to show how the imposition of significant tariffs and then the creation of high levels of instability and uncertainty ultimately affects the decisions that enterprises and individuals are going to make. And what we have seen in terms of the trade data between China and the United States in the first half of the year reflects the results of conscious American policy making, which is ultimately to reduce the amount of trade that actually happens between the two countries. The effects of that, of course, at a more operational level is increasing price pressures in the United States, the risk of product scarcity, as supply chains become disrupted, and in the medium term, a rising cost structure for American households and American industry. None of this actually delivers the kind of outcomes that the American policymakers speak explicitly about as ambitions, namely the rejuvenation of American industry and those sorts of things. But these are actually the results of the policies. So you can really test the theory against what actually happens, and what actually happens is a long way away from the theory.
And the U.S. latest inflation number doesn't point to a rosy picture, right? Because of the tariff threats and measures and fluctuations. Prices have gone up for the average Americans who may have voted for President Donald Trump. But this is interesting. A lot of people, when President Trump and this administration imposed or bragged about Liberation Day, they say China is going to suffer. When the US uses tariff, China's economy is going to collapse or suffer or shudder. But actually, if you look at how big the impact the tariffs may be, it doesn't seem to have been that big. I mean, first of all, the percentage of China's exports to the United States is only, according to rough calculation, only about 3% of China's GDP. This is more or less in terms of goods. We're not talking about services. Warwick, so has the effects of these tariffs been grossly exaggerated? And is that why China says we are not going to kneel in front of the pressure?
Yeah, look, over the course of the last 30 years, the position of the United States economy in terms of the global economy at large and also in relation to China's own economy has changed considerably, and principally it has become decentered. So a generation and a half ago, the United States economy was the largest trading partner of the majority of nations in the world. As you indicated earlier, that situation is now not the case, and China itself has become the largest trading partner of over 140 nations, and with 190 nations has actually seen trade grow in the first half of the year. So the US economy is simply not as important as it once was. Its role in terms of Chinese net exports and GDP, of course, as you say, is relatively modest, which means that whatever truncation there is of net trade between the United States and China takes place, its ultimate impact on China's overall economy is relatively modest, and which can be compensated for by two main things. One is growing domestic demand, which is what we have seen in terms of industrial output, investment, and consumption, retail expenditure, and by the expansion of alternative markets, which has also happened. So on all fronts, the Chinese economic system has adapted robustly to the constraints placed on it by the United States. And in many ways, it really shows that not only can China adapt and move on, but that the rest of the world can adapt and move on to a world where the United States simply doesn't call the shots anymore.
Well, let's not forget, traditional Chinese wisdom tells you don't fall into the same place twice, right? If you already experienced the first trade war, you're going to prepare for the second, and this time you prepare well. And over the course of a couple of years, we know what might come. So, let's do the preparation. I'm going to pull out the quote here. Sheng Laiyun, who is deputy head of the National Bureau of Statistics, said this yesterday. He said China will overcome external uncertainties caused by US tariffs and try to achieve economic stability and certainty at the home court. Professor Xu, just now you talked a little bit about that. Has China the ability and the confidence that it can do this despite the external uncertainties?
Of course, undoubtedly. Just as I emphasized last time, I'm very, very, expecting the much more beautiful data later, because China's has been using the counter-cyclical macro policies, so which have fostered some economic development. So you see, during the 14th five-year plan, economy has already expanded by more than 35 trillion yuan, about US dollars 4.89 trillion. So average 5.5 annual growing and laying a very solid base for this year, 5.3 high level operation, and this will be going on. And other things we cannot forget that, for example, the market entities inside China have become more dynamic. By the end of May, the number of registered private enterprises, don't forget, private enterprises in China surpassed 55 million, up more than 40% from in 2020. These firms create over 80% of new urban jobs, providing resilient, just as other two experts repeat again and again, the resilient foundation for the economy's upward momentum. Just as example of my hometown, Hangzhou. So maybe more than 97% of the economy is private economy.
Yeah.
So we have the planned economy plus private
Yeah.
enterprises. What the regime advantages we have. That is.
We don't have the time to go into details, but I just know every Chinese business is, is focused on how to survive, how to thrive, and they're diversifying their businesses. I do want to bring in this number that China's imports for the first half of this year, and if you doubt Chinese numbers, here you will be convinced that they not only show the beautiful, good-looking ones, but also the negative ones. It does say that China's imports dropped by 2.7% for the first half of this year, although quarterly there were fluctuations. The first quarter was more negative, the second quarter was positive growth. Mr. Cardillo, is China buying less from the world? Is that the impression you're getting?
In some field, China is valuing independence and sovereignty. So there is a strategic way of, if we talk about, let's say, raw material and rare earth or from agri-food also. But on the other side, it's becoming more and more a place of elaborating, of second stage or first phase of elaboration or manufacturing or production. So this also has an impact on the import and exports. Sometimes things are imported and exported again. That's, for example, the entire look like for the American sanctions on the earth, for example, or technology ban. Also the fact that many international private companies, Chinese private companies, are expanding and growing internationally. This is also having an impact. It's also true that when in 2020, 2019, China created the so-called dual circulation of economy, internal circulation and international circulation or external circulation. That strategic plan also is having an impact because now we are looking at the results. Generally, it's more and more robust.
Yeah. Well, I have to leave it there. We got 2 minutes left, all in all. But I just want to say this, with a growing middle class, with Chinese domestic consumption making up over half of China's GDP, there is huge appetite for goods, services, new things, quality things from everywhere. Of course, including production materials and high-tech equipment and so on and so forth. We are going to leave it there. Oh, one last number. The average Chinese works 48 hours a week. Do your own calculation.
Yeah.
Let's leave it there.
Let's
leave it there.
Yeah.
We work too hard.
We even don't have holiday.
Sorry for the word. We work too hard. Many thanks to Professor Qinhua, Vice Dean at the National Academy of Development Strategy of Renmin University of China, Ivan Cardillo, Chairman of the Italy-China Business Development Forum, and Professor Warwick Powell, Adjunct Professor, Queensland University of Technology. Thank you so much. That's it for this edition of The Point with me, Liu Xin, coming to you from Beijing. As always, you can follow me on Facebook and X using the handle Liu Xin in Beijing. On behalf of the whole team, thank you for watching. You've got the point.